Welcome to The Explainer. Today, we're unpacking a concept that is an absolute game changer. We're talking about redefining how we spend our time and view our future, true financial freedom. And hey, this isn't about that Hollywood fantasy, hoarding massive piles of cash or swimming in gold coins. It's really about the journey to a life of absolute choice. So let's dive right into this. I want you to ask yourself, what does true wealth actually look like to you? Seriously, picture your ideal financial state right now. For a lot of us, the immediate image that pops up is heavily influenced by movies and social media, right? We kind of get brainwashed into thinking financial freedom is exclusively for the ultra-rich. But here's the reality check. Sure, your income matters, but your daily financial habits, those matter way, way more. The myth tells us that wealth is all about becoming a millionaire overnight, buying flashy luxury cars, or living in these massive mansions. But the reality is honestly much simpler. True financial freedom is waking up every single morning with absolutely zero bill anxiety. It's not about working because you have to, it's about working because you choose to. It's having the power to make decisions based on your actual dreams rather than just being boxed in by whatever is currently in your checking account. All right, let's get into phase one, building your financial foundation. Think of this as your defensive playbook. Now, as the architect of your own life, you simply cannot build a massive wealth engine without a rock-solid foundation. And that foundation starts with a very specific number, 3 to 6. Financial experts point to this as the ultimate golden rule for your emergency fund. You need to save up 3 to 6 months of living expenses. Think of this as your shield. This fund protects you from those unexpected life events we all face, a sudden job loss, a medical emergency, or out-of-nowhere major car repairs. Without this 3 to 6 month buffer, any of these totally normal life hiccups can instantly send you spiraling into expensive debt. So how do we actually build that shield? Well, we follow 3 foundational steps. Step 1, create a budget and track your expenses. Look, if you don't write down your income and your expenses, you're just going to constantly wonder where your money magically vanished to at the end of the month. Step 2 is the golden rule of personal finance. Spend less than you earn and save the difference. And step 3, attack that high-interest credit card debt. Listen, mistakes are just part of the journey. Literally everyone makes a poor financial decision at some point, but high-interest debt is a trap. Crushing it has to be your top priority, because once it's gone, all that money is finally freed up for the next phase.
Which brings us to phase 2, growing your wealth engine. This is where we open up the offensive playbook.
Once your defensive shield is firmly in place and that expensive debt is gone, you can shift your energy to the offense. This is where the real magic happens, and it's all driven by the undisputed heavyweight champion of wealth generation, compound interest. It's this incredible principle where your investments earn returns, and then, here's the kicker, those returns are reinvested to earn even more returns. It's exactly like a snowball rolling down a massive mountain, just getting larger and faster as it goes. Starting early gives compounding more time to work its absolute magic. And hey, you don't need thousands of dollars to get going. Even really small monthly investments can grow into serious wealth over time. Now, we've got to make a super vital distinction here between saving and investing. Saving is absolutely essential for that emergency fund, but saving alone usually just cannot beat inflation over the long haul. If you only save, you're actually kind of losing purchasing power every single year. Investing, on the other hand, is how you make your money clock in and work for you. Whether we're talking about stocks, index funds, bonds, real estate, or businesses, investing is the engine that actually outpaces inflation and generates real, lasting wealth.
And if you really want to put your foot on the gas and accelerate your financial freedom, you've got to realize that relying on just one single paycheck is pretty risky. Learning valuable new skills, starting up a side business, freelancing, or even creating online content can generate entirely new income streams for you. The basic math is the more streams of income you have flowing in, the greater your financial security becomes, and the faster you can feed that wealth engine we were just talking about.
All right, let's move into phase 3, dodging common money traps. This is all about overcoming those pesky behavioral hurdles. You see, the path to financial freedom is almost never a perfectly straight line. You are going to face behavioral hurdles, and just understanding them is honestly half the battle. The single biggest trap out there, lifestyle inflation. Just because you get a nice raise at work doesn't mean you should instantly go out and buy a massive liability, like a luxury car that is just going to constantly cost you money to maintain. Instead, you want to focus all your energy on acquiring assets. We're talking investments, rental properties, businesses. You want to buy things that put money into your pocket even when you're sleeping. Expensive, flashy purchases might offer temporary happiness, but they completely derail your long-term goals.
To actually stick to that strategy, you need a few core mindset principles in your back pocket. First off, pay yourself first and make it automatic. Before you spend a single dime on entertainment or going out, automatically transfer a portion of your income straight into your savings and investments. Make your future self the priority. Second, avoid those guaranteed high return scams. Real wealth is built through patience and making smart, calculated decisions. Third, you gotta embrace that patience. Markets are going to rise and fall, setbacks are totally normal, it's just part of the ride. And finally, live below your means. When you get a raise, increase your investments, not just your spending habits.
And part of dodging those traps also means actively managing your risk. You have to protect your future. That means securing good health insurance, having life insurance where it's appropriate to protect your family, and making sure your investments are properly diversified. You absolutely do not want a single unexpected event to completely wipe out years and years of your hard work and disciplined saving. Which leads us to our final phase, phase 4, the real ultimate reward. Let's talk about the emotional payoff. So why are we doing all of this budgeting and investing in the first place? We have to shift away from the cold hard math for a second and talk about the real emotional rewards. First is significantly improved mental health. Money-related stress is a massive, massive cause of anxiety for so many people. Having a solid financial plan provides this incredible sense of confidence and peace of mind. Second is the ability to be generous. When your own needs are comfortably met, you can actually help your family and support your community. And finally, it's the freedom to pursue meaningful work, to travel, to volunteer, or honestly, just to spend more quality time with the people you love.
It really all boils down to this. Financial freedom is not measured by the size of your bank account, but by the amount of control you have over your life. That right there is the absolute core message of this entire explainer. Time and control are your greatest, most profoundly valuable assets. The final destination is going to look a bit different and personal for everyone, whether that's living a simple, modest lifestyle or building massive generational wealth. But the core principle is about taking back the steering wheel of your own life.
Which leaves us with a final, lingering question for you to chew on. What will you choose to do with your freedom? Look, the journey isn't always going to be easy, but every single dollar saved and every smart decision you make brings you one step closer to true security. So start today. Stay consistent. Let time become your absolute greatest financial partner. So ask yourself, what's your very first step going to be?